Up now, we have Forum Daily's weekly market update with Catherine Murray, host of The Buck Stops Here. All yours, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. Well, we are seeing North American equity markets stabilize today and, in fact, trend higher, reversing a number of days of declines. Recall the declines really were sparked by fears that the U.S. Federal Reserve will, in fact, continue to raise rates or tighten the monetary policy. When we were seeing a rally occur in the market going back a couple of weeks ago, the market or investors were anticipating that the U.S. Federal Reserve is going to ease off on the tightening mode, given the fact that economic data was softening. What's actually occurred over the past 5 days is that we've been receiving economic data that was a little bit hotter or better than expectations, including on the inflation front as well as the jobs front. So on the back of that, you've got the markets selling off, the equity markets, the bonds also selling off, the short-term yields moving higher. But big picture here as well, the longer term yield is declining. So you've got an inversion of the yield curve that is deepening here, which is quite worrying for investors. An inverted yield curve tends to indicate that we will see a recession in the future, if we're not already even in one. So nonetheless, there's a lot of different movements going on within the marketplace right now. As we look at the markets today, though, as I said, they are trending higher both in the United States as well as Canada. We're seeing the energy sector be a big outperformer. WTI is up by about 2.5%. And we're also seeing travel and leisure move higher as well today. But the risk-off sentiment is certainly front and center. It's quite different versus December. Normally you get a seasonal uptick in December, but that's not been the case. We've seen the S&P 500 down for 5 days. That's the worst performance for December since 2011. But again, we'll see. Maybe we'll get a Santa Claus rally to end December. A lot to be watched, though. We have heard from CEOs being a little bit more cautious in terms of consumer demand. We've also seen a number of layoffs, even just over the past week, let alone the past couple of weeks. So there is concern about the growth going forward. Now, on the positive side, we did hear out of China that they are going to loosen their zero COVID policy. And that is positive in terms of global growth and global demand. At the same time, there's also fears that that will spark inflation. So maybe a little bit of a double-edged sword, but I think in a slower, lower growth global world, a bit of an uptick from China would help overall companies. Away from that, we're also hearing out of the Goldman Sachs Financial Services Conference that the bank CEOs are saying that credit is healthy and loan growth is pretty good as well. What to watch for those specifically in the United States as we wait to hear from the U.S. Federal Reserve next Wednesday. We've got PPI tomorrow and CPI next Tuesday. So those will be really important indicators in terms of what we can expect to hear from the U.S. Federal Reserve as it relates to raising rates and therefore the impact that has on markets. As we look at Canada, we did hear from the BOC, the Bank of Canada, yesterday. They raised rates by 50 basis points, bringing their rate up to 4.25%. The banks, the Canadian banks, followed suit by raising their prime rate to 6.45%. So as expected, perhaps, to see the banks move their rates higher following the BOC. Interestingly here, though, obviously that's putting a lot of pressure on the housing market. We have seen home prices down for the past 8 months and peaked to where we currently stand in the Toronto home prices. We're down by about 18% in terms of, just to give you an indication as to how far those prices have fallen. Interestingly as well, RBC has a report out just highlighting that renters have increased quite dramatically, 3 times the rate of home owners over the past decade. Even though 2/3 of Canadians do own a home, you are seeing the pace of renting increase quite dramatically. Lastly, I'll just point out one stock to watch here, Shopify. UBS initiated coverage on it with a sell rating and a $30 price target. Nima, I'll leave it there. Back to you.
All right, thanks for that, Catherine. Again, that was Catherine Murray, host of The Buck Stops Here, which airs on Sunday mornings at 9 a.m. Eastern, only on the News Forum Network.